Welcome to this live Q&A with the 138SL Chairman and VP of Investor Relations at GK Capital, L.E.A.R.N. So we're going to be just talking about, just some of the questions we've had. We've done the prospectus review. We've actually, had a drop into the investor briefing that was a couple of weeks ago. And we've had the CEO series interview with Cranston Yuan, and at this point we just want to get our final questions answered to have a complete understanding of the offer. So we're going to be speaking with the chairman for 138SL, Ian Passard, and speak to Ryan as well, just to get a better, more, I guess, final and complete understanding of the offer. So thank you so much for joining us. It's going to be a great session. Let's get started. All right, let us pray. Thank you, Lord, for the ability to produce wealth. Lord, we pray that this session will be a meaningful one for all those who will participate. Lord, we pray that as we seek to make wise investment decisions for our families, to leave a legacy for those who you've asked us to steward, we pray, Lord, that you'll just give us wisdom, knowledge, and understanding. In Jesus' name, amen. All right, join me in welcoming Ian Passard. Welcome, Ian. And
Morning.
Morning, gentlemen. Thank you so much for making the time. I know that it's been an interesting season, so lots happening, but thank you so much for being here. All right, so what I'm going
to morning,
yes.
Morning, Ian. Morning, Joanne. Good to be here.
Yes, and Ryan's definitely no stranger to our platform. We still have a record for Ryan being our longest interview. That record is 3 years old, and it's not going anywhere anytime soon. So thank you both for being here. So we've been discussing 138 for a couple of weeks now. So we have the key aspects of the offer understood, but I wanted to double click, starting with you, Ian, on the concession agreement, right? I find that persons may not fully understand what that means. It brings questions like, what about the concentration risk with UE and all the things that come with that. So help us to understand the concession agreement first, and let's see if that gives persons a good understanding as to what that agreement really means for 138 and the impact that it has.
Sure, Jeremy. Thanks, and thanks for the opportunity. The concession agreement, I would say, is the bedrock. This is like literally the foundation on which the business model of 138 is built. So if we take a step back, just before we talk a little on the concession agreement, the concept of 138 and what is in existence is a public-private partnership. So one of these PPPs. That is operational between 138 Student Living as the project conceptualizer, the folks who have been able to build out and are now operating and executing. A partnership that includes the University of the West Indies and by extension has the backing of the regional governments that support the University of the West Indies. The PPP is governed by a concession agreement, and as all of the various PPPs are. So if you think about, for example, the highway, there is a concession agreement that was in place with NROC and the government of Jamaica and the folks who built it, etc. It is a similar kind of situation that exists with our concession agreement, except, of course, it's tailored for our operation, which is the provision of student living. What are some of the key elements of this concession agreement? The first key one is that it goes for an initial period of 30 years with an extension of 35 for concession agreement number 1. That is the original concession, which really takes care of the majority of the housing as it relates to the provision of residence at the university for 4 main halls. Concession 2 really took one of the legacy halls, the Irving Hall, brought it under 138's umbrella, but is governed by a a second concession agreement. That concession agreement term, I believe, is 30 or 35 years. The first concession agreement, which is a more substantial one, carries a implicit guaranteed real rate of return of 15% to 138, and by extension to the shareholders of 138. What does that mean? Literally at the end, if we can picture 138, if we just talk about round numbers, about 10 years old. So if you look another 55 years down the road, when the project is literally handed over to the University of the West Indies for them to take over the operation and to run student housing, at a minimum, all the numbers have to be trued up at that point in time. And the owners, the shareholders of 138, at the end of it, will get a resulting cash flow that results in a 15% real, and by real, we're talking about index to the US dollars, real 15% internal rate of return. So that's a key component of it. Another key component is that the University of the West Indies for Concession Agreement 1 guarantees a 90% occupancy for essentially what is a full year. It's 11 months, but it's like a 1-year contract that everyone signs. There's a guarantee occupancy of 90%. Under Concession Agreement 2, there is a 90% guarantee, but that runs only for 9 months. And so the summer period, there is no guarantee for the summer period. You know, it's all well and good to have these concession agreements. The proof of the pudding is in the eating, and we saw the proof of the pudding as to how the concession agreement responded during the COVID period. We all recall that we had significant lockdowns from 2020 and transition into 2021. The halls of residents were literally empty, and we're talking about 1,400 plus rooms being empty. And because of the concession agreement and the 90% guarantee, when you actually look at the results of 138, 138 actually made record numbers, record profit during that period of time, and that speaks testimony to just how strong the foundation and fundamentals of the concession agreement is. And the way we at 138 look at it is, if you are actually able to make such good numbers and to be able to retain such a strong partnership with the University of the West Indies during the COVID-19 pandemic, imagine what is going to happen as we now have emerged out of the pandemic stronger, with stronger demand, a stronger partnership with the University of the West Indies, where we're looking to build out further the model of 138 to, you know, what is going to be a very exciting future. So that's how I would put our concession agreement in a nutshell, Jeremy.
All right, great. Thank you for that. So it leads me to my next question, actually. With that model that's in place now for the concession agreement, what other applications would you have to that model that you've created? Because something that was mentioned at the investor briefing that piqued my interest was, I think it was John who said, you know, hospitals, prisons, and schools are untapped. Can you expand on that? Is it a plan to use that model that you have now to apply to maybe providing some sort of service to those industries? Is it anything that you can share any details on right now?
Yeah, absolutely. So I'll share some details on that, but there's also a bit of untapped potential under the current concession agreement. We're actually able to do an additional 800 plus rooms under the current concession agreement at the University of the West Indies. Right now, Jermaine, we have a situation, a very good situation, where for 138, demand is outstripping supply. So in the immediate term, we're actually going to be mobilizing a project. The foundation has already been done, and we are able to expand our room at UA by about 10%. So that's another 144 rooms. We expect that project to be completed within the next 12 to 18 months. So right away, we see an opportunity for the top line growth of 138. Thereafter, we'll assess again. Who to tell? Maybe we do another 144 room complex or a 200 room complex, because as I said, we have the ability to go up to 800 more rooms. Within the space of student living, there are other universities. UTech is one, and there are a few other universities that have been showing growth, and there is a demand for student housing. We're going to be looking at those options as well. And we're going to be looking at opportunities not only in Jamaica. We have already started to look at opportunities for student housing in the Caribbean, and we're going to continue that push. But to get right back to your question, can this be applied, and are there opportunities in other areas? And the short answer to that is yes. And the encouraging answers for the folks who are looking at 138 as a potential investment is to be able to share that although we don't have any details worked out at this point, we already have been working for the last 18 months on another potential PPP project. This is again outside of the space of student living. And these things take a while before all the pieces come together and gel. But the real message to communicate is that, Jermaine, we are already well down the road in terms of looking at other opportunities outside of student living. And some of the areas you mentioned, certainly we think there's potential there. When you look at some of our young professionals, we do have a housing shortage, and what I would call affordable housing shortage here in Jamaica. We could very well be looking at providing solutions for certain categories of workers, that really has the requirement, and based on where their center of work is, maybe a location that's in the right place could help to fill that gap. And we're certainly going to be looking at all of those opportunities, Jeremy.
All right. So what you're saying is that though your primary business now is student living, that scope may very well change in the coming years, and it's something that you already have the model for, and it's just a matter of finalizing those talks that could lead to potential opportunities, and as they come, you'll notify shareholders.
Yes, absolutely. And maybe if I put it in context of numbers, since your audience, I'm sure, are looking at numbers. If we look at the potential in student housing alone, I would say in the next 5 years, we could be looking at a top line growth for 138 of about 50%. If you're looking at, and we do expect to be able to land some of these other PPP type arrangements, we're looking at a top line growth that could be doubling and more than doubling in terms of top line for 138. So I think there's plenty of opportunities and prospects for 138 to be excited about.
All right, sounds good. Right now, I wanted to ask you, right, about that. So investors, of course, are looking for multiple things, right? One of them, so there are persons who invest primarily for capital gains. There are persons who invest primarily for dividends, right? And I think 138 has been kind of positioning themselves now as a dividend-paying stock, right? What opportunities do you see for the investors within this current climate that we have for how the offer is being positioned?
Well, great question. So my read of it in the current environment is that, and to contextualize the current environment, it's one of, I would say, risen interest rates. So the jury is still out as to whether we will see rates increase aggressively after this. But the point is the rates are elevated right now, and the logical belief is that it will put some pressure on the stock market. However, the other side of increased interest rates that aren't spoken about a lot is the risk of default and the risk of lack of capacity to service on fixed income. And that's one of the things that persons chasing yields should be mindful of. What 138 offers is an insulation from that variability in the market because of what Ian had said before, the concession agreement, but also the inelasticity of student demand. So in simple terms, the fact of the matter is the educating of one's family is going to be at the top of the priority list. There are many other things that would fall by the wayside if in the event of a tightening economy or a tightening household economy. But parents, and I think anybody with kids can attest to this, are going to move heaven and earth to ensure their kids have the best chance of a productive life. And education is a big part of that. So 138 has put itself right in the middle of an industry that I would say is mandatory in a formalized way. And its net margins will allow it to pay increased dividends going forward. I think the payout had been delayed on two separate occasions. Firstly, by the starting up of the business. At the times, people forget that, 10 years ago, the Leslie Robinson Hall really, the Greenfield didn't exist, right? And then secondly, with COVID, again, once it had gotten above that 90% occupancy in 2019, COVID came, and in 2020, after March 2020, the halls were empty. And that was a big setback from a cash flow standpoint. Hence, we'd have seen a receivable, which is now coming down, but it's a natural byproduct of that. So to answer the question in a short way, it really offers a unique type exposure, one that is not threatened by the variability of the times, short of there being another pandemic that causes us to separate for 9 months. And I think the odds are not in favor of that. And the dividends, which have already started this year and should continue going forward, will again provide a rate that I would say is superior to even the central bank rate, which is about 7.5% now, and that's declining, likely to decline. I should say in the USA, the Federal Reserve has already started to put the brakes on their rate hikes, and the expectation there'll be one more this year, and it won't be aggressive either. They're saying 25 basis points or 0.25% for the listeners who may not be familiar with that jargon. So as I said before, 138 inelastic demand, dividend yields aiming at 9% plus, 8.5 plus, inelasticity of student accommodation and education. So that's what I'd say it offers, despite the environment that could be a little bit uncertain.
All right, thanks for that. I also wanted to ask you, because I've heard kind of this concern around the risk that UE is currently the only client, right? What do you say, to that concern from investors?
Well, I think it's not really as great a concern unless we're going to have 15,000 students in Jamaica go elsewhere to be educated. Unless we think that there's a risk of that, I don't think the concentration is a risk at all. And if it were ever one, you have the concession agreement which lies under it. So in this respect, I wouldn't be concerned. We're talking about a market that is served by Jamaicans. If you think about it, the exposure is similar to an entity that doesn't export. So less than 5% of Wisynco's revenues come from export, but we don't hear talk of there being risk or concentration with Wisynco. So I'm not sure an entity that appeals to an entire nation and then the Caribbean as well is a concentration risk, if you get what I'm saying.
Yes, definitely.
Jermaine, if I may, because Ryan is right on spot. It is a misconception to think that UE is a customer of 138. Our customer base is actually the students, about 1,800 of them, that we have a direct contract with at 138. Those are the customers of 138. It's only if we have to call on the 90% guarantee that UE becomes a customer. So I think we need to make sure that we understand clearly the distinction between who the clients are for 138, which are the students, as against the University of the West Indies, that basically is a backstop guarantee in case we don't have the occupancy. And the good thing is that pre-COVID and now post-COVID, we have demand which is outstripping supply. So Do we expect the university to be a customer of 138? No, quite frankly.
All right, fair enough. I appreciate that. So really, when you think of it as the students being the customers, and it goes from 1 to about 1,800, and then with that being a subset of the total students that are attending university, it doesn't seem like that big of a concern when you look at it through that lens. So definitely appreciate that. I wanted to take back the question to you, Ian, about the opportunities outside of Jamaica, right? Because there's talk about, you know, regional expansion, maybe going outside the country. How soon can we look to see that materialize, and what would that entail?
Yeah, so we are definitely going to be looking at opportunities outside of Jamaica. But if we were to really be realistic and bracket it, I think we have so many things that we have to accomplish right now in Jamaica that for the next, I would say, 3 to 5 years, the majority of the focus is going to be on really executing well on the projects and the opportunities that we have in Jamaica, while at the same time we are going to most likely have to form a business development team that are focused on looking at the opportunities outside of Jamaica. And we have already started in terms of a regional look, and that is the most natural place for us to start. But I would not certainly be surprised if we do not extend our search for opportunities outside of a Caribbean footprint year 5 and onwards, Jeremy.
Interesting. I want to ask more, but I don't want to stray from the scope that we have here. But that's interesting. So let's zoom in on that top line growth projection, right? 25 to 50%, I believe, is what you said. Some may consider that a little bit optimistic, but can we kind of get into a little bit more of the specifics as to why you think that's the potential, and is that for you a best case and a middle ground, or a worst case in terms of that target?
So 25 to 50 as it relates to student living is it's a fairly wide range, and I would say it's our average case situation. There is demand. There really is demand. I mean, this is going to come down to is how well we can execute on the project side of the equation. So how quickly can we arrange with folks to get building approvals? How can we make sure that the construction period doesn't drag on and we don't have issues that create delays in the execution? The fact is, and it's a good place to be, where you have demand outstripping supply, that is a good place for an operator to be. So it's going to come down to how efficient, how well we can partner with folks who can execute well on the project side. I think that 25% as a floor on top line growth is very, very easily achievable over the next 5 years. 50% is not a stretch either. Quite frankly, over 5 years, I think we'll be able to get up to that 50% level as it relates to student living projects that we can move on and execute on.
All right. So in terms of that impact, right? So the value proposition that's being shared for this offer is that, you know, you're able to reduce debt. That reduction of debt will reduce your finance cost. That reduction of the finance cost will allow more cash to be paid out in dividends, right? So is it that shareholders can expect, well, I wanted us to talk about the dividend strategy. Is it that the intention, because right now it's being positioned as once that dividend is paid, you're going to move up to your top 5 dividend paying companies on the whole market? Is the plan, as you grow top line and profits grow, to continue to grow that dividend or is it that your target and your projections are really based on the offer price as it is right now?
So if I have to take a first stab at it, and maybe Ryan can jump in after if he likes. The source or the use of the funds that we're looking at is two-pronged. But as you indicated, Jermaine, one of the main uses of the funds is going to be the reduction of debt. And we're projecting that our profit before tax number will increase anywhere from a low of 50% and possibly can double depending on the amount of debt that we repay, because we do have fairly substantial interest costs. We have been through the most difficult part of 138's existence. It started with a lot of negotiation and agreements. We then had to move in terms of the build-out phase. Then we have moved into operational phase. We are now seeing the results of the cash flows that this business generates. And we are firmly committed. Ryan mentioned a range of 8.5% and higher on a $4.40 offer price to new shareholders, new investors. We at 138 are targeting at 10%. That is the goal that we have. We want to be able to provide a dividend that provides a 10% dividend yield for the folks who will be coming in at $4.40. It is going to be substantial, because instead of having cash flows going out to pay interest, we're going to be saying to our shareholders, look, for the large part of what you have invested in and supported us on, the significant build-outs of the 4 halls of residence that we have done and what we have done at Irving Hall, here are the returns that we are generating, and here is how our shareholders are participating in these returns that we are generating. The other side of the equation is the growth side, and that's why we have the offer structured where our initial target, I believe, is 2.25 billion, and we have the ability to upsize to 3.2 billion. It's because of that upside will be able to provide us with some equity funding that we can move on quickly to execute on some of the expansion opportunities that we see in front of us. But from a dividend standpoint, we are laser focused that is going to be one of the main drivers and the distinguishing marks of 138 in terms of the Jamaica Stock Exchange. We want to be in that top 5 dividend yielding stock.
All right. Ryan, anything to add to that?
Yeah, I mean, if we look on the one payment already, the yield on that was about 2.5%. So already from one payment, 138 is in the probably top 15 of dividend yielding equities with one payment. So, and that was 50 odd million. The fact is the company now pays around 320 million, 330 million in interest costs per year, and the profit is about 320, 330 million as well. That's where it's likely to come out. So you already see very quickly where even reducing that interest cost by half can create significant dividend payment capacity. And to the investor, the tax and dividends is 15% versus 25% on interest income. That's some free financial advice. So right away, you're already seeing the value manifest itself. I want to touch on the revenue though. So remember that the entity has a floor of 90% occupancy, which is its revenue base, right? Year over year, from organic revenues, it's growing. It grew 12% for the June quarter. So 25% is not that far-fetched. And remember, that's without adding any new rooms or anything. That doesn't count the publicity that would have naturally resulted from this whole exercise and all of that. So because more persons know about 138 now. So despite the relative lack of familiarity before, this still managed to grow 12-13% top line. Bottom line grows as well, but within a net margin of 27%. So the business does not require as much revenue growth to be super profitable. And I think it's very important to bring that point across, because many times when we have offers, and it's no knock on any, it's just to show the uniqueness of this one. Many times when we have offers, they're venture led. What we are saying is the business as it is right now, stand still, removing debt, will see its profit grow off the rip, 40% plus, just by virtue of reducing that debt load, which will be to the benefit of the participating shareholders. We think from our projections, a best case scenario could see an eventual payout of 45 cents a share, which at 440, you can do the math for your LGI community and see what kind of number that is. It's 10% plus. And it's not far-fetched at all, So I said that to say that the model has been built to be a cash payer, an aggressive cash payer. There is no, if you look at the expense line for a number of years, it's been very constant. And it would be, there's no need for large additions to staff. There's nothing that's going to come out of the blue to cause any deep variations. So one can be very comfortable in that and reasonably, or more than reasonably, anticipate dividends, and they'll be number one in short order once they're able to execute as outlined. And bear in mind as well, this is not going to put expansion be at odds with expansion, but the board, as I gather, considers every venture in light of the objectives of the firm, and one of those right now is definitely the payment of dividends or continued payments of dividends. So there may be some side by side, but one won't compromise the other, and then the timing of that will play itself out in due course.
Lots to chew on there. I definitely like the sound of that. And full disclosure, our community members know for me, I'm an advocate for dividends. I'm an advocate for double-digit dividends specifically. That's something I've said on this platform many times. So happy to hear that. The question that I have next for you both, and Ryan, I figure you may want to take a crack at it first. There is, with this offer, two prices, right? Reserved price for existing shareholders of 405 and a 440 for new investors, right? I wanted to understand the how do you generate, give us some insight as to the process of determining a price. And the reason why I'm asking that question is that persons are looking at the price on the market, looking at the offer price, and wondering why it isn't much lower, considering the offer. So if you, I guess, maybe help us to understand the process, then maybe persons will understand why the prices are where they are right now.
Wondering why what isn't much lower, the offer price?
Yes. So persons have asked, okay, I'm seeing shares available on the market for maybe, let's say, between the range of 420 to maybe 440. So I think some persons were expecting that the offer price would have been significantly lower than whatever the market price is. So I wanted you to just explain what goes into how you prepare for an offer, when the price is determined, and what factors may lead to that.
Sure. Well, let me say, in 405, first and foremost, the 405 is also the price extended to current shareholders. So it incentivizes persons to become current shareholders, should they please. They can buy stock now and they can apply at 405. So that would, in my view, represent a discount. So that's the implication within the pricing there. What goes into it in the pricing of an offer is really a discussion between the broker and the client, and a read of the market, and it's dependent on several factors. Some of which are applicable to this conversation, some are not. Naturally, if you're trying to gauge interest and it's large interest, you will be driven or guided by what potential players would be interested in, at what price, what amount. So that's a factor. I think as well, we try to come to the market at a reasonable multiple relative to the market. So generally speaking, and I mean it all depends. It's all dependent or subjective. So there's no one size fits all. But in this case, as I said before, before I get to that, usually when you have offers for reserved or strategic partners, there is never usually an opportunity for outsiders to get into that pool. All right. What we've done in this case is give outsiders an opportunity to get in that pool by being existing shareholders, which the window for that exists as long as the offer remains open and it closes on October 6th. So, you're right, unless they're not interested in becoming an existing shareholder, then they would pay 440. But if they buy 100 units at 435 and then they buy 10 million at 405, then they'd be getting a pretty attractive price, if you ask me. So there's no real discrimination in this respect. So I think perhaps if they were armed with that knowledge and viewed it as 405 rather than 440, the question maybe worded a little different. That's my suspicion.
Yeah, sounds like it definitely. You have the instant ability to average down pretty much after buying whatever the market price is. All right, so Khalil has a question here. He's asking, what are the plans to control costs, particularly energy and labor going forward? I think this is for you, Ian.
Yeah, great question by Khalil. We did say it at the investor briefing, and I'll repeat it again. 138 has to be very efficient. We have to run an efficient operation from A to Z. And to that end, we had very early in this board's tenure, and I do have to give credit to our directors. We have a very strong and active board. We developed a set of operational metrics that are tracked on a month-by-month basis for all of the key drivers to track efficiency. That it includes items such as what should our utility cost be per occupancy, what should be our repairs and maintenance cost be per occupancy, and everything is kind of laid out. I think we have about 15 or so KPI metrics that are measured. We use a very simple tool. Red means we better pay attention to that right away. Amber means that, look here, this is an area that we need to pay attention to because it could be moving in the wrong direction. And green means we're either hitting the target or better than target. So those two areas that Khalil mentioned are, under real scrutiny. We do have some initiatives that we are going to be undertaking, particularly as far as the energy aspect of it is concerned, because I think that's a fairly low-hanging fruit. But yeah, generally, our goal is to run a very efficient operation. We want to pay out less so that we can meet the dividend payout requirements. So we have to spend less money. We have to make more profit. From more profits, we can have more funds that can be allocated to the dividend payment. We're not letting go of that objective that we have to be one of the top dividend paying companies on the stock exchange.
All right. Thank you for that, Ian. Khalil is asking again, has there been considerations made to share the information about this APO with strategic partners, such as clients renting units? I mean, I think the answer to that is the offer is being advertised publicly. I went on YouTube and all I saw were 138 ads. So it's I think that's kind of but I'll allow you, Ryan or Ian, to respond to his question.
I mean, absolutely. I mean, this is one such instance. We've. I'm assuming that there'll be a bit more visibility around the offer now. It's been in the newspapers. But if there's a special interest group that has an interest in speaking with us, very, very comfortable with that, facilitating that conversation. We're not very difficult to reach at all. I am on Twitter around the clock once I'm at the meeting. So, we're around. I'm imagining that special interest group is online more than available in physical spaces. So it's very easy to reach us, put it that way. So yes, very interested in facilitating.
All right. And I believe, Ryan, as you were explaining earlier, I think persons in the chat wanted to just clarify. I think Cashwin is phrasing it a little more complete in terms of the question. Are you saying that if they bought shares on the market today, they'll still be 2 days from now considered an existing shareholder and will be able to pay 405 to purchase additional shares?
Yes.
Okay. All right. So that should address your question, Cashwayne, Jerome, and Lenworth, right? So hopefully that is clear. Sachin, I'm going to ask you to rephrase that question. I don't know if you're asking what is the real reason for this APO now. If yes, I'll ask you to rephrase that. So I do have a couple more questions. So while persons are typing theirs, I'll ask the few that I have left. So what I've seen is, or I got the impression from the investor briefing that there is a desire to include more shareholders into the pool, right? So, and specifically retail investors. Is this a specific strategy? Is this something that you are looking for, maybe a target number of shareholders? Can I, understand a little bit more about that?
Yeah, sure. So just a perspective, when 138 went public would have been 2014. And at that time, I know some of your viewers may have a hard time identifying with that time. But at that time, the Jamaica Stock Exchange was not as vibrant as it is now. At that time, when you have IPOs, or there were no APOs, and you have IPOs with applications of like 100 people. A big one would have been maybe like 300 people or so. So some of the holdings at the time were a lot more narrow than they are now, where you'll have an offer. I think the last week's one grade studio was 4,000, right? So, and so you would have then a lot more narrow shareholding. One of the things that we've been very deliberate about is trying to expand the pool of retail shareholders in this offer. Hence, one of the reasons why that option of $4.05 is presented as it is, because we believe in the democratization of wealth, the access to what we believe will be wealth generating assets. And furthermore, the fact of the matter is this is an institution or a company driven by students. It's driven by students, it's driven by their parents, and we believe that students and their parents should have the opportunity to participate cost effectively. And we believe as well that the more of them that have a vested interest in this, and some may view it as comparable to a heritage type investment, that where a person just invests in it for 18 years and pull whatever at the end. We think this can replicate that and even more, and do even better than that by virtue of the higher payout than usual. So yes, a high retail take up is important. We understand that this offer would be more steered towards a particular demographic, but it doesn't mean it needs to be to the exclusion of another demographic. And so if we're able to generate or interest a lot of retail participants, that'd be wonderful. Can I just touch on something, Jeremy, that had come up as their question? That was about labor and energy. So, inflation in Jamaica had hit about, I think it went as high as 11%. So if we look at the cost of 138 for 2022, for labor, it was 156 million over 143 the year before, which is about less than 10% increase. And utilities was 85 million in 2021 versus 103 for 2022. So despite the high inflation environment of the times, there was some pretty good cost containment, which would have been below the rate of inflation of the times, that I think can give investors perspective or current reasonable assurance of the firm's ability to manage this cost well. So good question. And I think the numbers do tend to show that they've managed to keep a lid on them to the best extent possible, despite external pressures that they can't control.
Yeah. All right, a couple more questions coming in. So for Lenworth, who asks if the shares can be accessed on Moneyline, yes, I saw it on JMMB's platform recently. So you should be able to access it there. NB Lee is saying the fact that you can become an existing shareholder now is interesting in order to access the special rate. I actually thought that it was as at the date of the prospectus, so that was new information to me as well. That's definitely a good thing to know. So Sasheen rephrased her question to ask, what is the reason for this APO now?
You want me to take it, Ian?
Go ahead. Yeah, man. Go ahead.
I mean, the real reasons are as dictated. I found myself in a conversation with somebody the other day saying that I understand why persons would look on and think there must be more to this. This is too good to be true. But the facts are what the facts are. The numbers are what the numbers are. The margins in this business are superior to any other business on the Jamaica Stock Exchange. The numbers bear that out in any sector. Whether they're in real estate, though this is a student accommodation business, whether they're in real estate, manufacturing, retail, finance, etc. All the business has said is we have capitalized at the outset with debt outweighing equity to build. Now we're rebalancing our books. We are optimizing our capital structure to reduce debt and to share the upside with investors who come along for this journey with us. They've weathered a lot of storms, weathered the storms of building and completing. And if you've been in real estate before or you've been in the construction business before, you can understand that there is a lot of potential risk, and completion is not as easy as it seems. And you can ask any player, or just look at the numbers of any player that you see embarking on projects on the Jamaica Stock Exchange. So really and truly, that is what is the reasoning behind the offer. It's to allow investors to come along with an entity that has weathered that storm of construction and the storm of COVID-19, where there was the university campus was deserted, understandably so. Social distancing was a thing. We remember that. I mean, we may not want to, but there was a time where everybody was at home, and there are questions about would online learning replace physical learning, and I think that has proven to not be the case. And now, having weathered those two significant storms, still be standing, still be the most profitable. Now, the optimization of the capital structure will happen, and the business will be able to pay out a pretty large percentage of its profit as dividends. So that's really the reason. There's no hidden reasoning. They're not going to take the money and embark on anything outside the scope because they're guided by that agreement. And yeah, I think the reason is to put money in investors' pockets and, get some cash in hand, more cash in hand.
Sounds very simple and straightforward there. Lenworth is asking, what's the minimum amount to take advantage of the existing shareholder price? I'm assuming that there's no minimum to become an existing shareholder, whatever the minimum is for the JSE, which is 1 share. So
everything don't function of the number of shares they have, and I don't know Lenworth's portfolio, so I can't answer that question.
Cashwin is asking, should this offer be successful, will the dividend payments be quarterly, semi-annually, or annually?
Yeah,
I would say probably to be determined. At this stage, it is likely to be either semi-annually or annually.
Okay. So I also have a question as to when would the first dividend consideration be, right? So we close October 6th. I'm assuming that, you'll have some things to take care of. You are in your, I think, closing out your current financial year. I'm assuming that there might be a dividend paid from that, as from those funds as well, or is it that you're waiting for the completion of this new phase before those dividends are paid? I wanted to understand when investors could expect the next dividend consideration.
So speaking at a 30,000 foot level, I would expect it to be approximately the same time period as when the first dividend was paid. which I believe is first quarter of the calendar year.
Yes.
I was going to say that to not compromise a chairman who has, board confidentiality and having no knowledge, thinking of the board, the timing of the operation, this is the back to school time now, so they'll be gathering quite a bit of resources, and that would more or less continue into the next year. So just based on that timing alone and the dust settling from this offer, and others on Christmas and coming into January, I think the last dividend was paid in February.
Yes, correct.
Reasonable to expect that that timeline would hold until we see what this new normal looks like.
All right, awesome. Just a couple more questions here. Khalil is asking, what are the plans to possibly increase the amount of revenue earned per room occupied? Actually, something I thought about as well. So thank you, Khalil, for these questions.
Yeah. You want me to go, Chair?
Yeah, go ahead.
Chairman is constrained because he has access to confidential information. I don't want to put him in any position. So the rates are pegged to US. We're not trying to kill students. We think that we need to offer a cost-effective solution in a comfortable and secure setting. However, the possibility for growth in short-term rental, Khalil, is robust. And it has the short-term rental rate is at multiples of what the student occupy, what the rate students pay. So with short-term rental growing 50% year over year, it's very likely that with every percentage point growth in short-term rentals, we will be able to generate a higher dollar per night per room. So I think that would be the answer, short-term rentals. But base rates are pegged to US. Granted, we're not in a devaluation or devaluation-driven economy at this time. The dollar's been stable for quite a while. So while you have the security, the US dollar side, short-term rental does offer that upside. I think it's $80 to $90 a night versus, I don't know, $50 or $500 a month for students. So you can work the math on that.
Yeah. A lot of math, but good math. Good math. All right. I think this is our final question. Khalil, well, it seems to be more of a comment. He's looking forward to reaching out and setting up that session for next week. Many students like myself would love to hear more about the offer directly and consider it. Just bear in mind, Khalil, that the offer closes in about 2 weeks. So definitely be sure to set up that appointment next week. And if you have any trouble, I mean, as Ryan said, he's very accessible on all platforms, actually, I found with Ryan, and always very responsive. So I'm sure you'll be able to set that up. So at this time, gentlemen, I'll just ask you both to give closing comments, right? I believe that we have done quite extensive coverage of this offer. If you missed any of these videos, just be sure to check them out on our channel. If you search for 138 Student Living on YouTube, you're bound to see our videos. So we've done the prospectus review, we've done the CEO interview, we are having this Q&A now, and it's just an opportunity for you to learn all you can about the offer. We aren't financial advisors here, but we provide you with the information for you to be able to process and speak to the relevant persons to make that decision. So I'll ask you both, Ryan and Ian, to give just your closing comments or remarks to what you think may just help persons to come to a final decision about what they will do next. I'll ask you to go first, Ian. That's okay.
Sure. So I think we have, done a fairly good job over the last couple of weeks since the marketing effort has started on this APO to tell the story of 138. And if I just to really wrap it up in a nutshell, I think it so far has been a successful story. And we are looking to build on that success and to share that success with a wider group of investors and participants. My parting is going to be simply this. When we come and we are asking, average investors to trust us with their funds, I am saying to them, yes, you can trust me as chairman and you can trust our board to hold your funds, to exercise good governance in the operations of 138. Trust us to be responsible. Trust us to live up to our word and to deliver what we say we are going to deliver. And that is what I'd like to say to your audience, Jeremy.
All right, thank you, Ryan.
What I'd say is 138 is one of one. It offers unique access to student accommodation as an investment opportunity for the average person. It's the first of its kind. I won't say it's the last, but it definitely seems that it'll be the first of its kind for some time. And I think it has a place in every investment portfolio just because of the diversity it offers. I think what we may find is as the model continues to play itself out, that investors may be thinking, boy, I'm keeping themselves from missing out. And that's not something anybody wants. Not trying to incite fear of missing out, but the reality is the reality. And we wouldn't be saying it if it wasn't true. We have a lot of our reputations behind this, and that's important, because when you're willing to stand behind something, it says a lot about how you perceive it. So one of one, student accommodations, big business, attracted billions overseas, and like many opportunities that have done well in Jamaica, many times the trends were detected overseas. It's an opportunity to be first world in one's investment positioning, and we think that the future is very bright. And the good thing is it's very easy to track the model. Just look at how many students are going to UA, look at where your kids are being educated or seeking to be educated. And as Jamaica continues to grow, the business itself will continue to develop. So that'll be it in a nutshell. Oh, and Khalil can reach out to you for my details and set it up. I'm here next week, travel the week after, so we can work on that.
All right, great. Thank you both, gentlemen. A lot of good information from you both. I have actually learned things that I never knew here, so I'm definitely grateful to you both. All the best for the closure of the offer, and I'm sure we'll speak to you both very soon.
All right.
Thank you so much.
All right, everyone, thanks for watching. I will ask you to be sure to, if you have any questions, maybe you're watching this on the replay, feel free to post it in the comment below the video. I'll definitely reach out to the 138 team or the GK team to get those questions answered. Thank you so much for being here. Be sure to like the video, subscribe to this channel if you are brand new, and if you have any questions about the offer, be sure to check out all the videos that I mentioned. I actually released an article as well this morning to our newsletter readers, so be sure to check that out if you're already a subscriber. If you're not subscribed to our email list, the link should be either in our profile on any of our social media platforms or in the links section on YouTube. And thank you so much for being here. I hope to see you in the very next video.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media